Hello everybody, here is Yulia Hazanov with Keller Williams Realty, and today is the second part of my Q&A with the wonderful and amazing lender, Todd Galde with Cross Country Mortgage. Stay tuned. So, since we're talking about that, what do you think about like the VA financing in the USDA,
Yeah, so
in this market?
Yep, so FHA is a government-sponsored, government insured loan. VA, which is Veterans Administration, is also a government loan.
Mm-hmm.
It's a great loan. I love VA financing. Actually, Cross Country Mortgage is one of the top VA lenders in the nation. And so we have lots of experience, great pricing with VA. VA loan is for people, veterans, right, that have served in the military. No money down, right? One fact that most people may not know is there's no loan limit. There's no maximum loan limit. So if you qualify for a $1.2 million loan, you can actually get a $1.2 million loan. Yeah, and so there's no maximum. Interesting fact. During the first recession back in 2009, 2010, remember the collapse, right? When people were defaulting on their mortgage. You might be too young to remember this. So back then, 2008, 2009, 2010, when valuations crashed, right? Worldwide.
I remember that time.
You remember that?
Still, yeah.
Okay.
It was all over. Everyone knew about it.
So people were bailing on their mortgages, right? And just defaulting on their loans. Interesting fact is the least defaulted loan product, right, of all the types of product, all the types of loans, was a VA loan.
Oh, wow.
Yes, and I think that lends credence to the fact that veterans, have honor, right? They have this, they feel this responsibility, right, which they got from their military experience, and so as a result, they paid their mortgage more consistently, and they defaulted less than any other loan product during that time.
Wow.
Yeah.
There you go.
It's a cool
Just
stat.
show you how secure it is.
Yeah.
But you know what my question is? So if, let's say, in this crazy market, right, that we're talking about, like no contingency, everyone is bidding over the asking value, it's just going crazy, right? And very low inventory. Like, if I have a VA loan buyer that I'm working with, some sellers, they don't want to work with them, because, they don't put any money down, and their loan typically closes like more days, right? It has more days to close, typically.
Yeah, if
longer.
it's not in the right hands, it certainly can, because it is a little bit different than a conventional mortgage. The biggest challenge with a VA loan is the appraisal, because the appraiser on a VA loan and an FHA loan, quite frankly, are going to review the home a little bit more diligently than a conventional appraiser. The way I describe it, a conventional appraiser is going to walk through a home with just viewing things, right? They're going to look for water stains, they're going to look for broken windows, that's pretty much it, right? They're going to take photos. They're not going to nitpick the house too much. An FHA and a VA appraiser, and USDA is the third government type of loan. They walk through the house with a poker, right? Now they don't all walk through a house with a poker, but you can envision them going from room to room, looking for water stains, looking for dry rot, right? Termites, right? And they do literally poke.
Wow.
Yeah. So and VA, you have the termite report is a requirement for VA financing. If there are Section 1 items, right, versus Section 2, those items have to be repaired. So that's a big deal, and that's why a lot of sellers don't like to, accept a VA borrower. But I will say this though, and that's a valid concern. If you have a house that's 30 years old,
Yeah.
But I encourage. We do lots of VA financing. I've got some great VA borrowers, and if you are looking at homes that are on the market, and you're looking through the house and you see, a Marine's, insignia on the wall, or I can tell you that a veteran wants to sell to a veteran, right? There's an emotional tug there, and so this comment is it's an encouragement to a buyer who might be a veteran don't be discouraged, right? Because there really is an emotional component. You think about it, if you're a veteran and you've lived in this home for 35 years, you've raised all your children here, it's now time for you and your spouse to transition, right? I mean, do you want to sell your house to, an investor or someone who's just going to come in and put a renter into it? And, no, not necessarily. You want the you want the best offer. But really, if they're all competitive, and you've got an army, an army veteran, and you were, there is an emotional component there, and so don't be discouraged if you're a VA.
And what can you suggest? Like, I know that they can put like no money down, right? Like, I would encourage them, well, come with a down payment, even though I know you don't have to, but I would really encourage you, if you want to get your offer, looked at, and somewhere in the higher offers, just tighten your terms. Talk to your lender.
I think if you could package up your offer to where you reference VA financing, because you need to disclose that. And you're putting 10% down, 15% down. Yeah, that strengthens it. But I think if you're putting zero money down, but you have money in the bank, right? Because why would you put money down because rates are so low right now? For you as the buyer's agent to have a conversation with the listing agent, right? And to say, here's our offer, it's 100% financing for my veteran buyer, fully pre-approved, but we have money in savings, right, on the sidelines to pay if the appraisal doesn't come in, right? So we can make it work, right? So we don't want that to dissuade you from accepting our offer. And here's the proof of funds to show it, right?
And this is going to be added in the special terms in the offer.
Right. Exactly.
Okay. Yeah. So what else? I wanted to talk about. Is there like a big difference between being approved with a big bank or with like your lender, like a smaller lender,
Yes. So this is a great question. I love this question. So there's 3 types of ways to get home financing in the U.S. One is the bigger bank, right? And I won't name any names, but we all know who they are. We call them depositories, right? Because prior to the 80s, 70s, they didn't lend mortgages. They were just, you deposited your money in there, right? That's where you kept your money, and then in the 80s they got into mortgages because it was very lucrative. So those we call depositories. You walk in, to the brick and mortar building, and you can get a mortgage from that bank, from that lender, right? The second way is what we call brokers. Right, so mortgage brokers, and a lot of people call a mortgage, loan officer a broker, even though they may not be a broker. A broker is simply someone who sits in an office and they send out your file to an external wholesale lender, right? And there's nothing wrong with brokering. I think the biggest downside is you lose control of the transaction, right? So you're giving it up to this other lender who's going to underwrite it. The appraisal has to go through them, so there's a little disconnect if you're going through a broker. The third is what we are. Obviously, I have a vested interest in talking positive about mortgage bankers. So we're a mortgage banker across country. There's great mortgage bankers all over the country. Mortgage banker is someone who is direct to the feds, right? Fannie Mae and Freddie Mac. So they have direct access to the funds, which means the purest pricing, right? Which is just like the big banks. And underwriting is in-house, right? Processing is in-house. Everything's in-house, right? And you have speed, right? So you can, as a mortgage banker, loan officer, you can talk to the underwriter. You can ask, why did you interpret the income this way, right? For the most part.
And this is very big, by the way, because with some of these big banks, they have like so many people running the show that, they're like not even in touch with one another,
Correct.
And then sometimes they're losing the file or other things happen, and it takes forever.
That's the biggest
sometimes to get a
difference.
pre-approval.
Yeah, and what I will say, so and by the way, I'm obviously a mortgage banker, so I have a preference, right? But I have some of my very best friends are loan officers at the big banks, right? They've been there for years, and they're exceptional, right? And so, and I have brokers. I have friends who are brokers. So there's value in any of them. I will say, though, the question that you ask, so people come to me all the time, and I'll ask them, have you gone through the loan application process? And they, to a T, they'll say, yes, I've been approved with XYZ Bank. I've been approved with ABC Bank, right? That's not true. They actually haven't been approved through the bank. They've been approved through the loan officer in most cases, right? Now, if you've got a conditional underwritten approval like we talked about, different story. But most of the big banks don't have the time, right, to submit, you know,
so it's the lender, the specific
it's the
lender.
loan officer.
The loan
right?
officer,
Yeah. So my question then, you know, I clarify, you know, were you approved by the actual bank or the loan officer who looked at your, what I call the ABCs, the assets, the budget, and the credit, right? And if that's the case, you better trust that person.
And
right?
and it's funny enough because within the same like financial institution, the same bank, there could be like different loan officers that gonna give you a different pre-approvals.
Right.
So it's really important who you're working with and, you know, what type of relationship and trust you guys have.
Exactly. And that brings up the point, you know, there's certainly nothing wrong with meeting with a loan officer from a big bank, but ask them, you know, how long have you been doing this? You know, how many loans do you close every month? They have every right to ask those questions, right? Find out how good they are at what they do, you know, before just accepting, you know, the approval. Right?
And I think it's really important when you speak with a lender or with a loan officer, just, you know, talk to them on the phone. Don't just, I mean, sometimes people just get their pre-approval online, you know, through a link that the lender send them, and that's it. And then they wait until they get their pre-approval via email. I would highly encourage those buyers to, you know, just pick up the phone and reach out to them. Just talk to them, hear that person, see, you know, what they have to say.
Yeah, exactly. No, that's great advice.
Yeah, and Ted is definitely very, very helpful with, you know, with advices. You know, he's just very responsive and.
We love educating.
Yeah.
So I come from
very educating.
2-3 generations of teachers, and so I will say, I know this is. We want to answer questions of homeowners, so not about me, but I will say, you know, I love to educate, and my team, you know, loves to educate the borrowers, first-time home buyers, and even seasoned borrowers alike. And I think there's a lot of, not just lack of education, people just they're not getting their questions answered, but a lot of them are getting misinformation. Right? Bad information.
Big time.
Yeah. We talked a little bit about counties, right, and different. If you're pre-approved in a certain county, how does that affect, you know, looking in other counties? Possibly, and this is where the misinformation or maybe lack of information comes in.
So let's just rephrase the question because it's actually very important.
Okay.
So whenever you give a pre-approval to a buyer and they think, okay, here's my pre-approval, here is the amount, so they were pre-approved in a certain county, and then they go to a different county and they think they can use the same pre-approval, which is not always work that way.
Right. Exactly. Now, if you're coming in with 50% down, you know, 40% down, it doesn't necessarily matter. But if you're only coming in with 5% down, for example, and you get approved or pre-approved
in a specific county.
Correct. In a county that is what we call a high cost county or high balance county.
Like an example here in the Bay Area.
So 7 of the 9 counties that touch the Bay. So there's 9 counties that actually physically touch the Bay. 7 of them are what we call high cost counties. And what that means is about 20 years ago, HUD, which is the government institution that dictates maximum loan amounts for conventional financing, they have a maximum loan amount nationwide that conventional investors will finance. Right now it's $548,250. Okay. Now, in many counties like Contra Costa, Alameda, right, Los Angeles, these high cost counties in California and many across the nation, $548,000 doesn't get you anything, right? So 20 years ago they realized that and said, we're going to create a new tier a second tier of loan that can be sold on the secondary market, and it's called a high balance. Okay, and so today the high balance maximum is $822,375. Okay, call it $822,000. Now, what that means is this: let's say you're looking, for those that know Alameda County, for example, Livermore is a great little town that's up and coming in eastern Alameda County. And there's homes in Livermore that are in the 800, 900,000 range, right? That they're wonderful homes, but maybe you're being outbid, or for whatever reason your offer is not getting accepted. But you see a $900,000 home or an $800,000 home in Tracy, or Mountain House, or Manteca, which are little towns on the other side of the Altamont Pass.
Or Solano County.
Or if you go the other direction, yes.
Yeah.
So let's say you're looking in the 850 range, okay, with 5% down, and that's an $822,000 loan. And then you say, oh, there's a house in Mountain House for $850 that looks great. We can get that offer. You go over the Altamont Pass into San Joaquin County. San Joaquin is now has a max of $548,000. You can't put 5% down on a property in San Joaquin County that's listed at $850. Okay, so the point is, if you're getting qualified for a maximum with little down, 5-10% down, and you decide, hey, let's look in another county, call your loan officer, ask, okay, we're going to look in this other area, are we still qualified in this area, right?
Make sure
Very
that
important.
that pre-approval still works in these other counties you are looking at.
Exactly.
Always make sure of that.
Yeah, exactly.
Well,
Absolutely.
That's all amazing information.
Thank you. This has been
we
fun.
learned so much from you. And
This was only supposed to be 5 minutes, right?
I know, yeah. That's what it's always about.
Yeah.
But yeah, thank you so much
Absolutely.
for answering
Thank you for the
all
opportunity.
these questions. And yeah, I'm looking forward on closing more deals with you. And if anybody else have any other questions, feel free to, ask on the comments below. And thanks for watching. I'll see you on the next one.
Thank you so much.
Thanks. Bye.